Hello, welcome to Comprehensive Problem for Chapter 10. This is certainly a problem series that we're getting to know well, doing the same company each week, looking at different aspects of the accounting cycle, beginning to ask ourselves about how transactions fit in, new transactions every week given the new subjects that we have. And at this time in the semester, we're focusing on financial statements. We're focusing on the trial balance, getting the trial balance to balance, getting the account names listed, and then preparing the income statement, the statement of change in owner's equity, the balance sheet, and the cash flow statement. So that's the focus that of our work right now. That's the focus our work is taking right now. So you can see on the screen behind me that we have Basilio Company Security Services, and this is problem 10. And I've shown you this each week, but here's the ending trial balance from last week. You could open up week 9 and pull up that comprehensive problem for week 9, and the last item you'd find there is this very ending trial balance. It automatically becomes the beginning trial balance of the next period. So this is going to be the next period. We want to keep in mind we're now in 2020, so we've worked through every year. We're at December 31st, 2020, and of course this was the beginning balance for January. Then we had 23 journal entry transaction events, and then we had 24 to 30, so 7 adjusting entries, and then we had to prepare the financial statements, do the closing entries, and prepare the post-closing trial balance. So in this problem we worked through the entire cycle in the accounting, every step in the accounting cycle. So we're accepting that, I'm accepting that you can do these journal entries. So I've pulled up here the worksheet for comprehensive problem 10. Again, this time I went through and highlighted for you in light blue the transactions that would be new for you this time, so that the rest of these journal entries might look familiar, but this one might look new, and you might have to think about where did it come from, what does it look like. So event number 4 is one that I've identified. There are these transaction calculations down here at the bottom of every sheet where there's a calculation that you have to do, so you want to be sure that you can do those calculations. And then we have the rest of the events here for the past chapters. Most of that information is past chapters. Now here 16 is one, and my highlighting isn't showing, and I honestly I must have just missed it. That's the only thing I think I can say. So I can highlight it, but it isn't gonna stay because this doesn't hold. So it's got to be with the one that's saved off my computer, and this one isn't saved off my computer. So as we see, that's a new one, so I just highlighted it for you now so you can note 16. There's the payroll. Here's interest expense on the bonds. At least I didn't miss that one, huh? And here's interest expense on the note, which I did miss. I must have had bonds on my mind when I was doing this. So there's interest on the bonds, and I'm looking at these calculations and trying to make sure that these calculations, they're showing you up here rather than in the footnotes. All of these that are up here should really be in footnotes. They shouldn't be in the financial statements, but I know that you would do that. Now here's the, working now on the adjusting entries. So the adjusting entries start here at 24 with supplies. A key trigger is the dividend is usually the last entry of the normal transactions. They pay those dividends at the end of the year, and then we get started on these adjusting entries. So they go right down there through 30. And here are these calculations so that you would have those to review your depreciations and your uncollectible account expenses and all of that. And then you take these journal entries right here, like this 525 in number 30 in payroll tax expense. And I come over here now, payroll tax expenses in the equity section. It's going to be down here with the expenses, and since these are alphabetical, I'm going to head towards the P's, and there's the payroll tax expense, and there's entry number 30, and it's a debit, and so I have it on the debit side. And you just do that for every single journal entry, posting these amounts into the T accounts. So that's beginning to be a bit of a task, bigger now than when we first started, because we know so many more accounts. So then we'd have these two credits, probably right where my head is. We'd have these two credits right in here that we'd have to post to T accounts. So let's go look for these two liabilities, these payables, FICA, one for Social Security, one for Medicare. So here are the liabilities. Here are the FICAs right here. And there's our two entries. Here's the 30 and here's the 30. So those two credits are in there. So we would just post all 30 of these with every one of their transactions. You can begin to see they all start with their beginning balances. Don't forget the permanent accounts, assets, liabilities, owner's equity, our permanent accounts down through retained earnings, and they would have beginning balances. So here's the beginning balance in retained earnings. Here's the beginning balance in stock. Here's the beginning balance, none of it in accounts payable, but there were in employee income tax payable, and there were in FICA payable. So all of these liabilities would have their credit balances. And remember, since the accounts go up normally with the credit, that's the ending balance is going to be a credit. That's what we would expect to find. Cash, the beginning balance was a debit because cash is increased with the debit. Cash is a very active account, so it has all these transactions, and then at the end it has this ending balance that you can see. So it has a debit balance. Petty cash doesn't ever change, so it has a beginning balance. Accounts receivable have a beginning balance that's a debit, and they have an ending balance that's a debit. So assets and expenses and dividends, they all go up with debits, so they have debit balances. Liabilities, owner's equity, stock, retained earnings, and then revenues in the income statement all go up with credits. So that's the normal balance that they would carry by the way they go up. That's why I wanted to know that you really knew the theory of debits and credits, that you could work through the logic of this is an asset, it goes up with a debit, therefore I'm going to debit this by this much. It's going to have an ending balance of a debit. I wanted you to have that as a quick recall, because as these problems get very complex, if you have to look that up every time, it will take you hours to do these homework problems. And then after we get all of those accounts and we get all of their balances, the next thing then that we have to do is to prepare a trial balance. And so this time you have to prepare a trial balance. You have to go back and find those balances in the incomes in the T accounts, in the general ledger T accounts, and you have to put them in. So if you decide to partner up with somebody and one of you does the typing and the other one reads the balances, that would be fine with me, because I think all of you could pass a typing class, and this shouldn't be turned into a typing class. But then you reverse the roles when you do the other person's problem. You go to that person's computer and do that problem, and then the person who is calling out the numbers and calling out the ending balances is the one who will probably be learning the most, because they're seeing what these balances are. The person who's typing will be, calling on some typing skills, but having good recall on the account names and whether it's a debit or goes in the debit or credit balance. Whomever's the typist, be sure that you have a dollar sign at the top of each column and then a dollar sign at the bottom for each total. Remember, it's got to add up and equal one another. So it's up to you to call them out correctly so that these balances come out the same. So now then, the way this would go together, the way it would start, would be we wouldn't type anything on that first half line, but we type the account names, and we type them in order that they appear in the accounting equation. So remember that assets come first, so here are the assets, and all the assets are coming down on this left-hand column. So cash is first, petty cash is second, accounts receivable is third, accounts receivable credit cards is fourth, allowance for doubtful accounts is fifth, supplies is sixth, prepaid rent. Whomever is typing these just wants to type straight down and type those just exactly in the order that they appear. And then you can decide to put in the balance. Here's the balance. It's on the debit side. Remember, T account, the debits are on the left, credits are on the right. So if it's over on the left, it's a debit. If it's over on the right, it's a credit. And so we're just going to type those in. So you will start here. And again, you have a choice. I'll demonstrate it to you both ways, and you can decide. So the first thing that we have is cash. Now you can come across to here and put in a dollar sign and put in 113,718 if you want to. Whoops, sorry. Just a habit, huh? By the way, we normally do these. And then next comes petty cash. That's one we're all going to have memorized. It's only $100. So, and then now I notice that these columns are left justified. So up here in the top, they really should be perhaps centered, but that would give you that. What we really want is right justified. We want them to line up like dollars. So since your statements are coming off of my computer, I'm thinking yours are going to be formatted just the same way as mine. So you're going to need to want to format these and pull the numbers over and make it left justified on both columns. So now the next one I have is accounts receivable. Now, technically what you're going to be doing is you're going to be coming back up here each time, and there's cash, and there's that balance, and there's petty cash, and there's that balance, and here's accounts receivable, and it's $39,390. And it's 39,390. So, sorry, got that bad habit of heading an entry. So that's one way of doing it. Put them all in like that. Another way of doing them is for the person who is just to look up the account names, or have the person call off to you the account names and type them in the way they said. So another way to do that is allowance for DOUBT full accounts. Don't keep hitting the entry. Just, you got to come down with the arrow key. Supplies and merchandise inventory. And then go back and put in the amounts and just call off the amounts. So I happen to have one here with me so I can see it. Allowance for doubtful accounts carries a debit balance. Let's go up and look at that. So just like accumulated depreciation does. So here is accounts receivable. and accounts receivable credit cards. And accounts receivable credit cards, though, has a zero balance in. We've collected all of those, so we don't put those in the trial balance. And then the next thing is the allowance. Now, unfortunately, it's at a page break, but here is allowance for doubtful accounts, and here's that credit balance of 4662. So that one's a credit balance, and so we're going to want to come down to the trial balance and put that in over here, and it's the first in the list. It's the first time we've been there, so it's 4,662. And then supplies, we'd go back up and look up supplies and find out that they are $210. And then we'd go back and look up merchandise inventory and find out that they are $14,400. And so then we would just build this. We'd build all the account names that are given there and all the account balances. So remember, whenever it's a debit or a credit balance, you enter it in these two columns, and then you add them together to make sure that they equal one another. And so once they equal one another, you'll know that you have all the accounts listed. Now, this is becoming a hefty trial balance, and it's going to be the first time I've really asked you to pull together all these account names into one place. So I don't mind if you and a friend, you and a partner, sit down and go to your room and your computer and use your software and write down, you type, and somebody reads these to you and you put them in, and then go over to their room and then you read them to them and they type and they put it in, and then you each get each side, but it will go, I think, faster than scrolling up and down. It might take maybe the same amount of time and just be more relational. If you don't want to do it with another person, of course, you're just welcome to go back and forth and scroll up and down until you find all of these every time. So I have merchandise inventory, so I would come back up here. There's supplies. There's prepaid rent, but it has a zero balance, so I wouldn't put it in. Here's merchandise inventory, and it has a balance, so I would put it in. Here's equipment, I'd put it in next. There's its balance, there's the van and its balance. Notice these accumulated depreciations, and they have a credit balance. So you would put all of those in just the way they show here in the T accounts. So that's a trial balance. Put in all the account names, put in their respective account balances. You'll have to total them up. I would encourage you to total them up on Excel. You can do it by a hand calculator, but it's much easier to correct in an Excel. Then we have the income statement. And so the income statement, we start over here. And remember, we've worked with these. I've given you page numbers where you can find these. I showed you every. Now the income statements are rather incomplete in Chapter 10 because all those income statements were only focusing on liabilities and interest. So you're going to have to go back and find one that you like that has all of these accounts. So the first one we're going to have is revenues, and we'll put that in. And then we're going to indent, and we're going to have our two revenue accounts, which is monitoring service revenue, and indent alarm sales. So then I have to come over here, and now I need to go find these two. They're going to be over in the revenues and expenses. So here's the expenses. So as I go up, there's alarm sales were 92.8 right here, and monitoring were 120 right here. So I'm going to go put those in to the income statement. Now, one thing about it is, once you have this trial balance done up, once you have this trial balance all set up, you only have to go up here to see what they are. And again, you can come up here, revenues and expenses are going to be down towards the bottom because these are in accounting equation order. And so here's the monitoring services, and that's 120. And so I put the dollar sign in there because it's the first item. And then this one is 92,800, and I put that in there. And then I get my total revenues here. And I sum those two and put in total revenues over here. This is the first in a list, so I have to put in the dollar sign, and it's 212,800. And you can probably see that 0 and 0 and 8 and 0 and 2 and 0, 9 and 2 is where they're getting that 1 and carry the 1 to get 2. So I don't think I gave away much information there, just adding it in for you. Now the next thing we're going to have, of course, is our cost of goods sold. And that you will go to the trial balance or to the cost of goods sold. It's an expense, the cost of goods sold expense, and it's 74,620, cost of goods sold 74,620. It's a debit. So when I get down here to my income statement, I'm going to put this in here with brackets around it because I want it to be subtracted. And then I'm going to get my gross margin. And then I'm going to identify my expenses. And then I'm going to come down here. I'm going to indent all of these, each one of these expenses. So I indent that. Now these are presented in alphabetical order, so we're just going to go up and find them. Advertising expense, come down to the next one. Credit card expense. Now we'll just continue like that till we get through all the expenses and the non-operating income and then the net income. Now remember, because these start a new list, they have to have a dollar sign, and that number is 18,000. So I put that number in there, and then I just list all these other numbers. You can see that it's signaling to you when there's math that's supposed to be done. I didn't take those out to help you begin to know where these accounts are. So you find your example for an income statement, you fill out the income statement, and you get net income here at the bottom. Now then, we have the next one is the statement of change in stockholders' equity. So you're going to go find your favorite statement of change in stockholders' equity, and you're going to begin to fill that out. Remember, it always starts the same, beginning common stock, because we have our invested capital in the first series of calculations here, and we have our earned capital down here with our retained earnings. So we're going to have beginning common stock plus common, and then we're going to get ending common stock and so we're going to put a dollar sign in here because it's how much we started out with, and then we're going to have a dollar sign in here because we're getting a new total and it's the first one in that line. When we do our beginning retained earnings, we also have a dollar sign because we're starting a new list, and we do not have a dollar sign here because this list is already started, but then we have one here because it's our total. So be sure that you watch for those characteristics. So we're going to have retained earnings, earned capital in here, and then we're going to have total stockholders' equity here at the bottom. Then we look down at our balance sheet. Again, find your favorite balance sheet that you want, and you were going to follow the examples that we've had. We start with assets. Always, you know, assets have to equal so that they're in this top part all by themselves. I've pointed out several good examples for you, plus you have examples from every week of these for what you did last week, and then what you were shown in the prior weeks when you were working on journal entries, and I was just giving you the financial statements. So you have those, you have all those financial statements that were in the solutions that are available to you in the Moodle classroom for each of the early weeks. So now we're going to indent these assets. Remember, the current assets come first, the long-term assets come second, and so they'll be down by themselves. You have quite a list of current assets, so you want to make sure that you get them all. And I'm going back up here to the T accounts because I'm not finishing that trial balance, but you'd have them all listed in the trial balance. So here's cash, petty cash, accounts receivable. Now credit card accounts you won't have because it has a zero balance. Here's your allowance, getting you a new book value there, taking that subtotal over in the left-hand column. And then here's supplies and prepaid rent and inventory, and we get all the way down to equipment. Equipment is our first what do I want to say here? Non-current asset. So we have equipment, vans, accumulated depreciation. So we're going to be taking a subtotal in our inner left-hand column here for these 4 accounts and getting a book value on our fixed assets. And then here's the building too, don't forget it. But then the land doesn't depreciate, so the land sits by itself. So you want to be sure that you don't include the land in these book value assets where you have accumulated depreciation. And so I'm going to go back down now to the assets. That's the trial balance. There's the income statement. There's the statement of change in owner's equity. Here's the balance sheet. That's the one I'm working on. And the first one we saw there was cash. And so we have cash over here, and we'll put in our cash value. We have indent and petty cash, and so it's going to come over here. Then we have indent, and we have accounts receivable, and now we have to work with our allowance. So we're going to put our dollar amount of our accounts receivable in there. We're going to indent. We're going to always take subtotals over in this left-hand column. That's why it's there, so we can move those totals back to the right-hand column. In very complex, you might have 4 columns, or 3, certainly 3 columns are very common. So now we're going to have allowance for doubtful accounts. And we're going to put that here with brackets around it, and then we're going to put the allowance for doubtful accounts book value in here. So as you put in your accounts receivable, you're putting in that dollar sign because it's the first item in that column, in that list, and then the allowance is a contra asset, so it's going to reduce the book value. Then when I come back after the allowance, I have my supplies, and I just keep going. So the same thing will happen then when I get to my this is going to be where I'll be putting accumulated depreciation. I think I got one too many M's in there. And so that's going to be in a bracket. But my other accounts, like my building, for instance, my other fixed asset, getting tired, would be there. My van, equipment, other current assets in here. But then when I get down here for this land, it's an asset by itself. It's a fixed asset. It doesn't have, it's not accumulated, so its balance will just go in here, and then we get total assets. So this begins to set up, as you can see, using these subtotal columns. Now, for you, the liabilities are going to come next. And when you get down here, you're going to have some bonds. So your bonds are going to be, these are going to be your liabilities. And down here, you're going to have bonds payable, and discount on bonds payable, and the discount on bonds payable then is also going to have, brackets around it, and will give us a book value on those bonds payable. So the other thing to remember is that the bonds payable, we're taking a subtotal for the first time, so we'll have a $sign there. The liabilities will have, this is where your $sign will go because it'll be your first in the list. And so this is our old friend accounts payable. Well, they actually have, it has a zero balance, so it doesn't have one. So this is employee income tax payable. And it'll have the $sign. So that's going to be the first one that you'll find that has an account balance in it. Accounts payable is up there, but it has a zero balance. I forgot that when I said it. So these will be kind of what you're working with new here. And then, of course, you get your total stockholders' equity. Then you get your total liabilities plus stockholders' equity down here, and that has to equal your total assets. Now, statement of cash flow, we worked on in detail last week, so we're bringing that forward with us for this week, and I'm thinking that you're probably making progress through all of these. You probably stumble a little bit, maybe go on a cul-de-sac here and there, have to turn around and come back out and get back on the main track, but that you're beginning to pull some understanding of these together, and that it's easier to look at the book and follow the example and put them in. So here we have cash without the J, cash from, cash flows from operating activities. And when we have cash flows from operating activities, the first thing we're going to have here is cash receipts from customers. So and I'm going to take care of that right away because it just bugs me. And then when we see cash receipts from customers, we remember that it has that superscript 1 next to it. So we come down here and it says cash receipts from customers. So now you have to put in the collection of accounts receivable. So you want to kind of look out here to taxes, and you want to come out to at least that far on the tabs so that you're beyond the taxes. So, whoops, not quite that far. So here we go. We put in a dollar sign and we want to do this calculation. So collections from accounts receivable. So, okay, we can tell that the account is accounts receivable. That's what we have, but we want the collections. So I've got to go back and look at accounts receivable T account. And I've got to know the theory of debits and credits well enough to say, okay, if that's accounts receivable, then what are collections? Which one of these transactions are collections of accounts receivable? Well, they're when accounts receivable are going down because I've collected the money from the people so they don't owe me anymore. And that's going to be a credit because it's an asset and it's going down. I reduce an asset with a credit. And I've got that big credit, number 13, of $167,000 where these people pay, my customers paid me their accounts and gave me the cash. So $167,100 is what that first number is. So collections from accounts receivable. So then I have to say, okay, collections from my credit cards. So I do the very same process. I go back to my credit cards. I go back to my T accounts, find my credit cards, which are going to be right below accounts receivable because they follow right in order together. And again, accounts receivable credit cards is an asset. A collection reduces an asset. So I'm looking for this account 11, this transaction 11, this event 11, $34,560 right over here. I'm going to pull that up just a bit so you can see it maybe a little bit better. There's the collection because it would be to collect a credit card would be a credit. So we're going to come down here. And I'm going to put in that $34,560, and then I have to underline that. As I recall, my borders was not working well for me last time. It was putting that box in instead of the border. So I'm going to take that off, and I'm just going to use the underline, and certainly I'll accept that from you. We all know it should be the border, but it isn't working in this table. Now it says total, so I have to add those two together. I think, you know, you'd add those two together and you'd have a dollar sign and you'd have 201,560. And so then I'm going to be looking for my 201,560. So I have here dollars 201,560, and I transfer that up there. Next, I'm going to have my indent and cash payments. From cash payments for expenses. Now then, notice that we always put receipts in first because we want the money that's coming in so that when we subtract the money that's going out, we have something to subtract from. You would always want receipts first and payments second. And that's the way you want people to do your own checking account. I can tell you that too. So now we're looking here and it says payment of compensation and related taxes. So this is the one we worked on last week. And remember, we had to first go find all the compensations. And that was cash out. Those were expenses. So that was cash out. And then the related taxes, we wanted to know the taxes that had not been paid. Because if they weren't a cash flow if they had not been paid. So it's compensation less the payables to get the amount of cash that actually was paid. Because what I want in here is the amount of cash that actually was paid. So this is going to start with a W, and I'm going to leave you to do that calculation following last week's example. And then it says payment of inventory. So we would go to the inventory, we would find the payment for the inventory, and we would put it in here. We're looking for the money that we spent on expenses to operate our business. These are our operating activities. So we have all of these expenses. Now remember, on the expenses for petty cash, we have to go back. Petty cash never changes in the T accounts. So we have to go back and look at the journal entry, because that's where we'll find the list of petty cash expenses. And then we get our total expenses, and we put our total expenses in this column. And so then you've got, you'll find that you'll have your sales tax payable and those other payments for interest. So when you look at those, then you'll get your net cash flows from operating activities will be here. And of course that'll be over in here when you get that total. And then we're going to have our net cash flows from investing activities and our net cash flows from financing activities. Now last week you didn't have an investing, so we're adding that for this week. We've been buying this land every transaction throughout the chapter just so we'd have an investing activity. And then you get your financing activities. So I'm going to leave this one for you to finish, since it's the one we worked on last week, and I've given you a good start here, and I've given you a good worksheet example for find the compensation, find the related taxes, find the taxes that have not been paid, since we want cash flow. So we're going to have compensation plus taxes as an expense, and then we're going to have minus all the any taxes that are still payable that we have not paid the cash, because if we have not paid the cash, then they're not in a cash flow. Okay, well, that ends this time. I want to say a couple of things. One is, this has got a lot of typing activity, but it's really just typing activity, so I'm expecting that it won't be as much time going back, looking through the chapter, pondering calculations. So it might be a little bit faster for you than when you had to write all those journal entries. So I'm hoping it's a little swifter. If it's not, then that's unfortunate, but we got it done. Second thing I want to remind you is this is the 11th week of class, so we only have 4 weeks left, 2 weeks before Thanksgiving and 2 weeks after. And so be sure that you're keeping up with the class. Those of you who are engaged in the class have been doing very well about getting the homework done, but many of you have not been doing very well about getting the test taken. My suggestion to you is to go back, read chapter 1, and sit down and take the test for chapter 1. And just see how much easier chapter 1 is to read now. Read it and mark the key words, and have your book ready, and then take the test. Remember, you've got 2 attempts. When you finish the first attempt, you can look through the questions you missed, and you'll know which ones you missed. Then you can go back and try to find the correct, try to study those some more, and then take the test again and see if you can get the right answer. After the second attempt, if you've missed it, you've just missed it. You need to go on. But you only have, you have 4 instruction weeks. You have 5 physical weeks. I really don't want you spending your time at Thanksgiving doing this. I want you home resting, having fun, and doing things with your family. And so the homework is all due by Friday, the last week of the instruction. The exams will stay open until midnight of the day of the exam. But you really should not try to save up all these tests until late in the semester, because you're going to have work in other classes, and this was really intended to read them and do them. I think you'll find now, if you go back and read chapter 1, and then you read chapter 2, and you go back and read chapter 3, they will they will astonish you of how simple they are, and how clear they are, and how much you understand at this point in the semester when you go back and read those early chapters and then take the tests. But my encouraging word here is to start taking the tests, because probably the majority of the people in both of these classes have not taken tests. So I think you should not be stockpiling them any too much longer. Anyway, thanks for working on this problem with me. Thanks for keeping up on the homework. You've done a great job as a class with that. Remember that you can post late work. I don't grade the late work immediately. I sort of save it up until some point in time. So your work will sit there in the late forum, and then I'll grade them all. And you'll see where it says graded through this point. And then I'll save them up again. I'll probably only be grading late homework maybe one time before Thanksgiving, and then one time at the end when we're leaving. So don't be sitting watching for me to grade the late work. I'll send you an email when I get it done, but I have a lot to do, and so I just have to save those up, because you can imagine I'm going all the way. I'm going everywhere when I'm grading late work, because it could come from any chapter. So I have to. It takes me a little bit more. It takes me more time, period. And so I sort of save those up. All right, enough said. Thank you for working with me this week. Thank you for giving so much attention to bonds. Bonds is one of my favorite subjects to teach, and I enjoy it very much. And those of you who are only going to meet online, I miss having to just post Excel spreadsheets and not be able to stand and demonstrate the math to you. But so be it, modern age. Have a good close to the week, and I'll see you around campus. Bye-bye.